Hi. This is just the thing that we've come across because we've taught our kids to be self-sufficient. Like, a good path is to work for yourself rather than enslave yourself to a 9 to 5 working for others for a minimum wage or someone dictating what your time is worth, putting value on themselves. Now, this is proving fairly successful with one of the older children, and young lady's gone out and started herself a YouTube channel, started making some money. In fact, from ad revenue, she's managed to pocket herself $150 odd. All of this can be added to a bank account, and like we've said to her, she said she wants to help put together for a house for the family. But like we've said, the aim of this is for them to be able to look after themselves, to be taught better than what we were taught. Now, she does really well. What we do for this as parents is we provide her with the computers and stuff she needs. Even her dad helps out with this because she's from a split parent family or a divorced family, and we do this for their benefit so that they can get a good start in life. Like, they get a footing. They understand that, what you learn in school will give you some basic knowledge, but life is a lot different. For example, they don't really teach you about money, finances, survival, what your value is as a person at school. So in all of this, she started being quite successful. She's gotten into some 3D modelling, and we were discussing with her how she could possibly start making a living off of that already, only being 13 years old. But what nullifies a lot of this is when you look at the outright greed of our governments and the taxation office that they set up and the standards that they put when a child starts earning income. Now, bear this in mind. I'm not great at open reading. I tend to read in my head. So I've got a lovely assistant here, so you don't have to put up with my ugly, narky voice while we go through some very boring tax stuff. But on the same note, I think it's quite interesting to see what they plan on doing with our children if our children ever show the initiative to build up. Because at the point this came up was the daughter could probably do some work in movies. I'm not getting into it, that trade secret. But she could do some work for movies and possibly pull in contracts of up to $150,000. Now, will the tax office make that worth her efforts? Will they allow her to get a head start in life? Let's hand this over to my beautiful assistant, who will start reading from the ATO Children's Tax Rates Guide.
Children's tax rates. The income tax on children under 18 years old is settled according to both the type of income and the status of the child who earned it. In general, children are taxed at higher rates or on unearned income under rules which were introduced to discourage income splitting via trusts and other means. Special rates apply to unearned income in excess of just $416 of children who are aged under 18 years at the end of the financial year. The higher taxing rates applicable to unearned income are set out in the tables below, excluding Medicare levy.
So this is if you just put money in a bank account for your kid to give them a head start.
Expected income, such as from employment, is not taxed under the tables set out below. It is taxed at the normal adult rate of taxes. A child or minor for income tax purposes is a person who is aged under the age of 18 years on the last day of the income year, 30th of June. Resident minor tax rates. So this was 2017-18, 2018-19, 19-2020 and 2020 to 2021. If they earn between $0 and $416, they pay nil tax. When they earn between $417 to $1,307, 66% of the excess over the $416 is taken. Over $1,307 earned, 45% of the entire amount of eligible income is taken.
Now, bear in mind, most large corporations in Australia pay next to nil tax, yet make billions of dollars.
Temporary budget repair levy, following from the federal tax budget in 2014-15. 0 to 416 is nil, 417 to 1,307, 68% of excess over $416, and over the $1,307, it's 47% of the entire amount of eligible income. That's 2013-14. We'll go down here a little bit. They're non-resident tax rates for children. Medicare levy. The above tax rates do not include Medicare levy, which should normally be taken into account for resident individuals unless exempt or eligible for a reduction. Medicare levy does not apply to any non-resident. So the kids still have to pay Medicare levy.
Thank you, Julia Gillard.
Expected income of minors. Children who are not expected persons will have the higher tax rate applied to income which is not expected income. For a more detailed summary of definitions, see expected persons and expected income. The tax for a minor whose taxable income consists of both eligible income and expected income will be calculated in two parts. The total tax liability is then the sum of the normal tax on the expected income slice and the higher tax on the eligible income remainder. Income for each component of the calculation is net income, i.e. deductions relevant to each type of income should be attributed before calculating the tax. Deductions which are apportionate are allocated to the income segments on a ratio of gross income accounts. Now if we go back here and we click on this one and we go down here, this is who declares interest. So parents putting money into their bank account for their child to save for the future. Who declares interest? Who declares interest depends on who owns or uses the funds of that account, no matter what type of account it is or the name of the account holder. You need to consider who provides the money, such as the initial and ongoing deposits into the account. Decide how the money is spent, regardless of who it is spent on. If you provide the money and spend it as you like, you must include the interest in your tax return. If the person who owns or uses the funds is the parent as a trustee of the child and no formal trust exists, quote the parent's tax file number. There is a formal trust, quote the trust's tax file number. If you hold a joint account, interest earned is divided equally among all account holders, who each declare their own share on the income in their tax return. If the amount deposited is considered excessive, you will need to examine it carefully to decide where the money came from and whose money it really is. Quoting a tax file number. A child can apply for a tax file number. There is no minimum age. Children are not exempt from quoting a tax file number. When deciding whether to quote a tax file number, you need to consider your child's age and the amount of interest they receive. Your child's age. If your child is less than 16 years old, special rules apply to their income from a savings account. When we work out their age, we treat them as being under 16 years old until the end of the calendar year in which they turn 16. If your child is any age they earn less than $120 per year from savings accounts per year, their financial institution will not withhold tax. Less than 16 years old and earns between $120 and $420 from savings accounts per year, provides either their date of birth or a tax file number, the financial institution will not withhold tax, and they don't need to lodge a tax return. If they don't provide either their date of birth or tax file number, the financial institution will withhold pay-as-you-go, payee tax at 47%, and they need to lodge a tax return if they want a refund. Less than 16 years old and earns $420 or more from savings accounts per year, provides their tax file number, the financial institution will not withhold tax. If they don't provide their tax file number, the financial institution will withhold payee tax at 47%, and they need to lodge a tax return if they want a refund. 16 or 17 years old earns $120 or more from their savings account per year and provides their tax file number, the financial institution will not withhold tax. If they don't provide their tax file number, the financial institution will withhold payee tax at 47%, and they need to lodge a tax return if they want a refund.
Otherwise, the government will keep half of it.
If you have a joint account between an adult and a child aged 16 years, the same rules apply as those for 16 or 17 years old. Amount of interest earned. The withholding tax is calculated on is the total interest earned, not just the amount above the threshold $420 or $120, depending on their circumstances. Where a deposit has a term of less than 1 year, or where interest is paid more than once per year, we apply a daily pro rata calculation on the threshold $420 or $120, depending on their circumstances. Lodging a tax return. If your child has had payee tax deducted, you will need to lodge a tax return on their behalf if you wish to claim any refund owed. If your child does not have a tax file number, you will need to get one before you can lodge a tax return on their behalf. Now, it's got examples here. Example 1, interest earned belongs to parents. Wayne opens an account for his son by depositing $5,000. Wayne is signatory to the account because Jack is 4 years old. Wayne makes regular deposits and withdrawals to pay for Jack's preschool expenses. Interest earned from that account is considered to be Wayne's, the parents. So the parent has to pay their taxes and stuff on the interest earned on the child's bank account, which they've put their money into and they've already paid taxes on. Example 2, interest earned belongs to child. Shauna is 8 years old and has a savings account in her name. Shauna's mother, Jill, is signatory to the account. The funding totaling $90 are birthday and Christmas presents from Shauna's relatives. Interest earned from the account is considered to be Shauna's. So the child will have to pay tax on presents that she's received from Christmas and stuff just because she's earned some money.
Yep. So, basically, they're screwing our children from the second they're born. If we ever try to get them ahead, give them a chance in a world that pretty much tries to start us with our feet tied, they're there to trip them over. This is just a bit of time to think about. You know, we can fight all we want for our kids, we can teach our kids all we want to better themselves and get ahead, but there's a greedy pack of mongrels sitting at the top of the bunch that just like to have their share, right? And all of this is supposedly to pay them for their schooling and stuff, which is slowly slipping, and we all know that's BS. Taxes don't pay for schools and roads. Schools and roads are part of a whole different system. Taxes are paying off a debt we don't even owe anymore. They're pretty much going into a piggy bank for the piggies. But just some thoughts, you know, our kids have a right to get ahead, and that's only fair. What's going on here? I could say far less than fair. Have a good day.